We had a client pull their personal credit bureau from 3 free credit bureau agencies, then get it from their online banking app and buy it from both Equifax and TransUnion, and then we pulled the one we would use to actually get them a mortgage, and you aren't going to believe which one had the best score. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. Okay, so this might be the most interesting video in the history of this channel. We had a client who was applying for a mortgage do us the favor of going through, and ultimately doing you the favor of going through and applying to get his free credit bureau online from 3 of the free credit bureau agencies, and then also getting it through his online banking app and getting it from Equifax and TransUnion directly, and then we compared it directly to what we pull in order to actually get him a mortgage. And the outcome is pretty surprising. You won't believe which one had the highest score. So let's get started by talking about the 3 free credit reports, because what we did is we had him go to Credit Karma, Borrowell, and Mogo and use their free credit reporting services in order to determine what his credit score would be. So Credit Karma uses the TransUnion credit bureau system, and Borrowell and Mogo use Equifax's risk score version 2.0. So we had our client pull his credit bureau from Credit Karma, and immediately once he had his credit score, which was 865, really good score by the way, they started offering him credit card offers. Now that was really interesting because before they showed him his credit report, his trade lines, anything else that had to do with his credit, they were immediately serving him up offers for credit cards and loans. And let's be clear here, these 3 free credit reporting services, they're all using credit bureaus as a loss leader. So in other words, what they're doing is they're giving you your credit score for free, which costs them money in order to sell you products. And how it works is they give you your credit score, then they offer you up offers for credit cards, loans, mortgages, all sorts of things, in the hopes that eventually you will get a product with one of their partners, and then as a result, they will receive a referral fee. Really simple system, really simple business model. You're the product, they're selling you to somebody else. Now the second company that we went to is Borrowell, and Borrowell uses Equifax's risk score version 2.0, just like Mogo does. And again, same sort of thing. We were able to pull the client's credit score, and ultimately he got a score of 826, so slightly lower than the TransUnion number that was received from Credit Karma. And the thing that struck us when the client went to Borrowell was he was immediately served up recommendations. And this is interesting because the first recommendation he was offered was a BMO Infinite Privilege card. So this is a very expensive, very high-end card. It comes with a $500 fee and a 20% interest rate, and it is a high-end product. And ultimately it was being delivered as a recommendation, not as an offer, which to us was kind of deceiving, because if Borrowell is telling their clients that this is a recommended product, then what a client may perceive is that that product is going to increase their credit score. And that isn't necessarily the case. In fact, it could have the opposite effect. Their credit score could go down because they're going to have a hard credit bureau pull in order to get the actual credit card. And then obviously, depending on how they use the card, it could decrease their credit score. So kind of a little bit misleading. We didn't really love that, but hey, that's the nature of the beast. Obviously, Borrowell is there to sell people who are getting their free credit score something. That's how they make their money. And that's exactly what they were doing in this case. And then we went to Mogo, and Mogo had a little bit of a different business model. They weren't promoting other people's credit cards or other people's mortgages or anything else like that. What it seemed like they were trying to do was to build a relationship with a potential client by giving them their free credit score and identity protection and stuff like that, identity monitoring. I can't remember exactly what the word that they used for it was. But ultimately what it seemed like they were trying to do was to sell Mogo related products. So things like a secured Visa card where you can put $1,000 on the card and then use it like it's a credit card, which if it's being reported to your credit bureau can actually be a really good way to increase your credit score if you don't have one. And then things like their cryptocurrency product, as well as a mortgage product. It appears that Mogo is licensed as a mortgage brokerage and ultimately offers mortgage products of different companies. So a little bit different business model here where they're trying to build a relationship. My guess is at some point they're going to try to become a mortgage lender or build out some sort of other lending product that is direct to consumer. But Again, still using the client as the product in order to sell something to that client. Now, just like with Borrowell, the credit score for the client was 826, again, using that same Equifax scoring model. And what was interesting was not only was the client being served up offers by all three of these companies, but as soon as he finished the three apps, he ended up getting a ton of online advertising for credit products through Instagram, through Facebook. Obviously, one of these companies, or all three of these companies, was using a Facebook ad pixel, and immediately on his Instagram and his Facebook accounts, he was being served up all sorts of ads for different types of credit products. So that's definitely one of the drawbacks of one of the free credit reporting companies, is that you almost immediately end up getting served advertisements for more and more products, which could, if you were susceptible to that advertising, end up having a negative effect on your credit. And one of the things we really fear is when somebody goes in and starts looking at their credit and wants to monitor it, well, if they're constantly getting served up ads, the temptation's there, and if it's the type of person who isn't necessarily good at managing their credit, well, that temptation could lead to more borrowing and more trouble and just an overall bad scenario. Now, the fourth place that we went to get a credit bureau was BMO. Because what we didn't know when we made our last video on credit was that most of the mobile banking apps actually have the ability to get your credit bureau from TransUnion. Of the 5 major banks, 4 of the 5 we've confirmed have this. The one that doesn't is TD. Come on, TD, get your act together. You're the preferred bank of millennials. Give us the ability to get our credit score from our online banking app. Come on. But the other 4 definitely do allow this, which makes Mogo, Borrowell, and Credit Karma virtually irrelevant. Because if you can get it from your online banking, why the heck would you go to another third-party service who's just going to serve you up ads in order to get it? So when our client pulled his credit bureau using the online banking app from BMO, he got the same credit score that he got from Credit Karma because BMO was using the TransUnion app, and ultimately got an 865 score again, which was interesting. 2 apps, both using TransUnion, both got the same score. So then our client went directly to transunion.ca and paid the $19.95 to get his credit score directly from them. And interestingly enough, lo and behold, his credit score was again 865. So congratulations, TransUnion. Pulled from 3 different places, all using TransUnion's bureau, and ultimately giving the same score to the client across the board. We thought that was really cool. Now with TransUnion, when you pay that $19.95, it is an ongoing monthly subscription for both your credit score and for some sort of identity protection. Take a look at that if you do sign up for it to make sure that you aren't getting billed monthly for something that you don't need. I'd highly recommend, since you can get it from your online banking app anyways, using your online banking app and canceling your TransUnion account, but that is completely up to you. So this is where it gets interesting, because this is now the 6th place where we're going to go to get our credit score. And in this case, the client went directly to Equifax.ca. And with Equifax.ca, you have the ability to pay the $19.95 for ongoing credit monitoring and your ongoing credit score. Or if you dig deep enough, you can get your credit score for a one-time fee of $23.95. But if you dig even deeper during this whole coronavirus COVID thing, Equifax is offered to give you your credit bureau for free. Now, if you use the free service, you don't get to see your score, but you can see what's actually on your credit bureau. But in this case, we wanted to see what the actual score was, so we had our client pay the $23.95, and when he pulled the score, we were shocked, because the score that came out was 766, 60 points lower than both Borrowell and Mogo, who use an Equifax product. Now, Equifax is clear in the fact that there's all sorts of reporting models that they use. In some cases, you will get a higher score. In some cases, you will get a lower score. But we found it interesting that when you use third-party services and TransUnion for what's deemed their educational scores, you got the same score. But when you use Mogo, Borrowell, and Equifax for their educational scores, that the number wasn't consistent across the board. And in fact, in this case, if our client would have bought his credit score directly from Equifax first, he would have thought that his credit score was far worse than what it is. Now in this case, because it was 766, well above average, in fact excellent, doesn't really make a big difference. But let's say that this was a normal and typical consumer. What if his score had been 666 and he had done all sorts of research and been told that if his beacon score wasn't 680, he wasn't going to be able to get qualified for as much of a mortgage or for certain products? Well, he may not have actually applied for a mortgage. And the reality of it is when we pulled his credit score, his score was even higher than it was with both Borrowell and Mogo. In fact, his Beacon 9 score, which is the most up-to-date credit score out there, was, get this, 863, just 2 points off of what TransUnion had given him. In fact, his credit score that would have been used by most lenders in Canada to get him a mortgage was significantly higher than the credit score that Equifax had given him. So if he had a lower score and ended up getting discouraged, he may not have actually applied for a mortgage, which we think is interesting and something that maybe Equifax should be looking at down the road when they look at their consumer purchase credit products. So why was the credit score that we use so much higher than the other ones from Equifax, the Borrowell, the Mogo, and the one bought directly from Equifax? Well, the reason why is because we use what's called Beacon 9, which is the most up-to-date credit reporting system in Canada. And it is set up and designed for today's times. So what that means is that it's designed to look at things like secured lines of credit differently than it would at unsecured lines of credit, which wasn't something that was in the previous versions of the Equifax scoring systems. So in this case, this client had very low debt, very low credit card debt, had unsecured lines of credit but wasn't using them, but then had one line of credit that was secured against his property. It was almost maxed out to the limit because he uses it for investments. And ultimately in the previous scoring systems, that would be looked upon in a less favorable light because it is a credit facility that was run up to the limit. And in Beacon 9, my understanding of it would indicate that in a secured line of credit sort of scenario, it isn't looked at in the same way as it would have been looked at previously. So the old credit bureau scoring and the old reporting that was both on Mogo and Borrowell system and on Equifax's direct-to-consumer product probably looks at that as if it's a fully drawn down line of credit and that's a negative, but the newer scoring system probably looks at it in a slightly different manner as it is secured and being used by somebody who has large amounts of credit available to them, but manages it very well. So what's the moral of the story on this whole thing? Well, the moral of the story is this. Well, first, you can't be sure based on what one company tells you your credit score is, that is actually the credit score that's going to be used in order to get you a loan. Second thing is, your credit score that's used to get you a loan may actually be considerably higher than the one that you get directly from Equifax or the one that you get from Borrowell or Mogo or from Credit Karma or from TransUnion directly. And third is, if you're using a free credit score program, a free credit score company, a free credit score app, understand that if they're giving it to you for free, you are the product and they are going to try to sell you something. So use companies like Credit Karma, Mogo, Borrowell, your BMO online app, or whatever bank that you use as online app. Use those as tools to help improve your credit, monitor your credit, make sure it's not going down. But ultimately, you aren't going to know what credit score is used to get you a loan, to get you a mortgage, to get you a credit card until such time as you actually apply for one. And here's the moral of the story. Only apply for credit when you need it. Don't do it because Borrowell or Credit Karma or Mogo tells you that you should be applying for a product or because they make a recommendation or an offer to you. Only do so if you absolutely need to apply for credit or if you need to build credit. Otherwise, use these tools as monitoring services and as nothing more. So if you've got questions or comments on how credit works, do me that favor, put the comments in the comment section below. I'll get to them as fast as I possibly can. And do me that other favor, hit that subscribe button, hit that notification bell, and hit the like button so more people like you can see this video. And ultimately, I hope to see you on the next one. Cheers.